which should be started right now. Anything I say or do can be held against me now, which I'm sure you all will. And let me let me go ahead and share my screen, share it clean, and we are off to the races. All right. After having a pretty good start to the week, we made the command decision yesterday to, after the turmoil of the markets, to just back off essentially from the markets. One of the reasons why we've been doing it a little bit more conservative that way is because we've kind of learned from mistakes in the past of being more aggressive when there's bigger trends in the market, and it's actually paid off very well for us in the last several weeks. So since Monday, haven't had any trades in since then. So we've been and it's some of it's about just profit preservation, I guess you would say, of not just getting aggressive and jumping into trades for the sake of getting into trades, for the sake of action, if you will. So let's talk a little bit about, for those that weren't in class yesterday, let's talk a little bit about what's transpired over the last 24 hours. I'll bring up my handy dandy trade sheet here, which today is March 30th. Last day of March, last day of trading, so the last day of trading for the month. So that's one thing that we can kind of keep an eye out for, is the fact that, if we are in the last day of trading, then we could perhaps see some, see some moves occur and perhaps some profit taking on some of these pairs. Wouldn't really count on it. I mean, but last day of trading for the month can often be and it's also the last day of trading for the quarter. I guess that would be a very a big thing to actually share also, is that not only is it the last trading day of the month, it's the last trading day of the quarter. Depending on how institutions work, a lot of institutions like traders to clear or take profits off of long-term positions at the end of the month. Oh, you know what? I'm sorry. You're right. Tomorrow, never mind. Good call. Yet further proof that I'm not the smartest guy in the room when I come in here. Tomorrow is the last trading day of the month, last trading day of the quarter. You are correct. Why did I think that? I do not know. All right, so let's go ahead and get started with wow. Sometimes, I tell you what, my lack of concentration can be scary. All right, so all the major markets are up big overnight, except the Nikkei, the Japanese index, but all the other ones have been steadily up big. When we look at markets overall, we'll go ahead here, and this is always a good way to kind of scroll through things. You see the Dow futures, S&P futures, NASDAQ futures are all up substantially. They've essentially fallen in love with Mrs. Yellen. You can see FTSE, DAX, CAC all up substantially, well over 1%. So it's been a very bullish day over in Europe. Asia, the Hang Seng and the Shanghai Stock Index, those both went very well overnight, up well over 2%, while the Nikkei was down 1%. So that's the only one that's really getting to us here. I think Japan may have not liked Yellen's testimony yesterday because it drove the yen stronger, and I think the stronger yen is something that Japan certainly doesn't want. But it seems like all the equities kind of followed back on Yellen yesterday. So speaking of Yellen, there's two news announcements that came out in the last 24 hours. As far as the ADP goes, those are the private payroll numbers. Those came out a little bit better than expected, plus 200 versus expectations of plus 195, so they were better than expected. Those are the private payroll numbers. Generally, you don't see that much of a big change in the market when you see those. What the big mover of the market overnight was Yellen's speech yesterday, which came out at 12:20. This is what caused us to kind of take a step back from the market last night. looking at some of these things as they occur, and even as you go through some of the analysis that came out with Yellen's speech, I thought the only thing that would really surprise the market is if she was surprisingly hawkish or even neutral, but she wasn't. She actually kept with this Fed speech being decidedly dovish on the as far as the economy goes. And dovish, remember, it doesn't necessarily mean that it doesn't necessarily mean that she has a negative outlook, but a lot of people were saying that her speech was damn near pessimistic for the economic forecast. This is very frustrating as a trader especially if you kind of look at fundamentals to drive the market, because of the fact that the Fed for the last several weeks since the Fed announcement has been speaking out of both ends of their mouths. You have different Fed members saying that, yeah, we could see a rate hike in April. And then you have Yellen coming out and saying, it's going to be gradual, and reiterating the gradual raising of interest rates. So some people thought that, her tone was almost pessimistic, not optimistic, but pessimistic for the economic forecast. And she mentioned the U.S. dollar several times in her speech as the appreciation of the dollar as being one of the risks to the market. There was a big U.S. dollar sell-off yesterday, in case you didn't see it. Here was Yellen's speech right in through here, and you see the dollar got slammed versus the euro, slammed versus the pound, went down versus the Swiss, down versus the yen, down versus the CAD, down versus the Aussie, down versus New Zealand. So pretty much all across the board, we've been experiencing some substantial dollar weakness, if you will. So that leads us into today of what type of strategies to employ when it comes to trading into obviously the immediate trend here is dollar weakness, and the longer term trend is starting to become more and more fuzzy as far as sideways action on the dollar, and which the dollar's generally been one of the the bigger driving currencies in the market. Up until this point, up until Yellen yesterday, it looked like the dollar was driving some strength in the market, but this kind of reversed itself. So this comes back down to if we're trading, it would be back to trading either direction on the dollar. We don't have to be careful for false breaks. And our other option, one of the other options here today is long on the commodity yen pairs. One of the things that I think we've seen with the yen, if you look at the only currency that's really making any headway as far as dollar strength goes, we're actually going to look at CAD yen, Stephen. That's a good call on that. CAD yen showing +5 and +20. Do I think it has further upside potential? Absolutely. Aussie yen, absolutely, and New Zealand yen. I think any three of those could be substantial candidates for a signal today, and we'll go through these one at a time as far as trading setups. But that's a good call, and it's good observation, because if we are going to have obviously the stock market loved Yellen's speech yesterday, and I just want to reiterate some things. And the purpose of education sometimes is repetition, constantly repeating things over and over again until you get it. If we even go back 7 or 8 months, anytime there's more pessimism surrounding I have no idea who's calling me there. Anytime there's more pessimism surrounding the markets, and when it comes to, or dovishness when it comes to the raising of interest rates, the stock market has actually liked it. They like the Fed. They like cheap money. They like the Fed staying on hold as far as any raising of interest rates. Stock market has actually gone down when there's more of a higher probability of raising rates. So the stock market overall, they like Yellen's speech yesterday. You can tell by the reaction of the market right after the speech. The stock market went up. I think that's one of the reasons why we're seeing some appreciation here in the yen. And if we do have up market conditions, it's going to lead to probably further appreciation in the higher yielding commodity currencies where money tends to flow, which have also been some of the strongest currencies versus the dollar. So let's start off with those. In fact, we don't have to do that. I can go ahead and start off looking at several of these. let's go in and take a look at, instead of having dollar yen on here, well, let's start where Stephen wanted to start, which was on CAD yen. Oh, yeah, that did make that close right up in there. CAD yen was one that I was looking at here as far as a potential trade opportunity, and it's actually pulling back right now, which is a good sign for us. This is one of the things that we've done in the past. What I would kind of recommend here on CAD yen, because if we do have an up day, it could lead to higher oil prices. It could lead to commodity appreciation. Is wait until you see how the CAD yen is +5 and +10 right in through here. It's also been, well bid as far as buying pressure on the CAD versus the yen. It's obviously above that +5 zone. I'm going to wait a little bit on this, just a little bit. I like the fact that it was closing into that new high, and this might be a little bit of a freaky, a bit of a freaky little trade opportunity for you. But what I would really look for here is I'm going to wait until after 9:30, and quite possibly you could also wait until, if you wanted to see the candle close at 10 o'clock. If you wanted to be a little bit more conservative, you could do that. In fact, let me put it this way here. Buy entry after, yeah, I was going to type this out after 9:30. In fact, let's give the market a little bit of room to open. That's a lot of typing to do for a single trade, but I'm going to say 9:40. I want to give the market a chance to open up here, and this has actually served us well when we've done this in the past. If it's still trading +5 and above the resistance level, quite honestly, even if it's a red candle and it pulls back, it would be tempting, if it's still showing a +5 on here, to buy into it. That's where it kind of gets a bit freaky on you, is that, even if it comes down and actually makes a downtrending arrow right in through here, I think that would be enough to, as long as it's +5, to get into that pair. But if it is trading above that resistance level, we don't necessarily have to wait until the 10 o'clock hour. If you want to wait till the 10 o'clock hour, you can. And as far as stops go, we can see it's right now at 86,471. If we used, say, a 3-bar reversal and put our stop right down below this low, which is 86.062. $86.062. And then look for a limit. CAD yen, this is one that can often give us potential a limit of 1 to 1.5 risk reward. I do think it has further upward momentum. I think if we get some bullishness in the market, if we get a nice little up day, it'll lead to commodity strength, or commodity currency strength, and it will lead to higher highs on the CAD yen, because I also think the yen can depreciate based on that. But we're going to give it a little bit of time. Like I said from yesterday, we want to be a bit cautious when it comes to these trades today. So let's put this in. Now, if you don't like CAD yen, there's a couple of others when it comes to the yen pairs. You can see from Monday, we never got the pound signal. We bought into a retracement on the dollar yen. That could have been good for a 1 to 1.5 risk reward. We were 2 for 2 as far as the trades that executed, and the break of the 3200 also executed on dollar CAD. That would have been 2 for 2 as far as our trades go. From you could have reached a full profitability on both of those. Let me go down here on the bottom here. These are commodity and yen crosses, which does take the dollar out of the equation. There we go. And then we'll switch to here. We'll go through scenarios with all the commodity crosses. But you don't want to do all three of them. You'd want to just pick one. You see how they all look the same? It kind of shows you that commodities are kind of driving it. You're going to look at all three of these charts and you're going to see them all looking relatively the same. Stop would be 85.968. This is on Aussie yen. All the commodity currencies have been showing, 3-bar reversal right in through here. All of them have been showing some strength here. Aussie yen's +2. Right now. Why am I waiting until after 9:40? And the reason why is because I want to confirm that we're going to have at least at the initial open. I just want the futures are indicating a higher open, but I want to confirm once the actual traders get going in the U.S. that they're going to push the market up. And I think if they do, these are all looking higher on the LP trend line. These are all looking higher on the PitView indicators. And if they breathe these things up, then I think we're going to be in business. And then last one, New Zealand yen. New Zealand yen looks a little bit different than the ones that we've looked at, but it's still showing higher highs. This one actually has found a little bit of resistance right over in here, right at the 7,800 level. And yeah, we'll get into the pound. Pound is one of my counter trend movers that I'm looking for here. New Zealand yen. And same thing, I would still go for like a 3-bar reversal. Like here's our 3 bars. This is kind of an inside one. So I put this one right down below this low. You can see that looks like almost like an ascending triangle. All right. Let's go to the next page on here. And New Zealand yen, same deal. Lie on break of resistance. So keep those 3 of those on your watch list. I wouldn't, take whichever one. In this case, I would just take whichever one gives you the best signal. Whichever kind of a one cancels other. Don't take all 3 of them because you'd basically be tripling up on the same trade. You'd be going long a commodity currency. So you can keep all 3 of these on your watch list and just and choose the one that you feel looks the best to you. Now, my buddy Phil just mentioned the pound dollar. I think the pound is a great candidate for essentially trading in either direction today. The thing is on the pound, it has been forming. I mean, this is, you look at this high right up in here. You look at this high. And then you look at this high. And you kind of got a bit, what seems to be kind of a short-term head and shoulders pattern. And then right in through here, when you connect through these lows, you kind of got the low that forms your neckline, which is right below the 4,400 level. Now, the other thing that makes this interesting, as Phil just mentioned, is the fact that from these previous highs up here at the 4,500 level, you can see that the pound is coming up to a 78.6% retracement, which is actually, I think, a very nice level. It's not necessarily a Gartley pattern, although you do get kind of a semblance of an ABC, an A, B, and then a bit of a C. I mean, that's not perfect or anything, but it is right at this 78.6. You can see that the pound is finding a lot of resistance right here at this 78.6 level. So we're going to zoom. I just wanted to show you that 78.6 level just so you can kind of see where we're going with this. But as far, I would treat this, this support level right in through here, I would treat it like a head and shoulders top. I mean, you could treat it like almost like a pennant formation, if you will, because it's making a lower high. Either way, if it breaks these lows, it's breaking down through consolidation. So in this case, what I would like to see on the pound a break or a close. I'm going to leave it up to you. A break. I'm just going to say break. There's something you don't see every day. Since it's +9 right now, since it's already gone +5, you know, if it breaks down through that neckline and you see it go negative as it's breaking down, that would also be below the 4,400 level. I think you go ahead and put this one in. I like the resistance level that it's at, and I think it would be worth a shot. Even if the pound's going to get stronger over the long term, I like the idea of the pound perhaps making a lower high, or I'm sorry, a higher low, if you will. You put the stop right up above here. Obviously, it's showing very positive here, but it's still in consolidation. Whenever you see like these big, you know, these big movements on these totals, and it still hasn't moved really anywhere, you don't really want to pay too much attention to it unless it gets out into space, unless it gets out into a place where it hasn't been. But you can see how wound up it is. So stop 1.44379, and then look for a limit. This is not necessarily a breakout trade. This is actually more of a retracement trade. That's why I showed you the 78.6 levels on that chart. This would be a counter trend trade, which are definitely the scariest trades to go into, because whenever you go into a counter trend movement, which the immediate trend has been up, but you can see based on the 78.6 that it's retracing back to what could be, and with the formation that it's making, what could be a key resistance level. You don't really look at this as a breakout trade, if you will. You look at this as more as a retracement trade, and that way you can look for higher amounts of risk reward. That's a really good level there on the pound. Actually, I might even call it counter trend. It's not the prettiest of Head and Shoulders tops, but it is a support level. Bring this dollar weakness trade up in here. And dollar weakness, let's see, how's the market opening right now? Up 29. We'll check that here in just a couple minutes. You have a couple of choices here when it comes to dollar weakness. I mean, generally when the dollar's gotten weaker versus other currencies, it's been, you know, the euro has actually been, you know, it's kind of been on fire here. The euro dollar, you know, we can choose the pound if we want to, but I don't think it matters as far as dollar weakness goes of where we go on this one. So I think the best route would actually be on the euro. The euro has one of the strongest trends, if you will, from the LP standpoint. Like I said, you could do the same thing on the pound and just look for a break of the high, but the euro seems to be finding some support right down in here at this 113.11 level. So I don't think you need to look that far for a dollar weakness trade today. I mean, this is us stating the obvious of, you know, this has been one of the big movers versus the dollar. I think if you see dollar weakness versus the European currencies, it's going to get weaker versus pretty much everybody. Buy entry. .13013. Actually, that would be, we'll put it 1 point, just to put it slightly below that, 993. Now I like momentum trades, but the only one where we're going to kind of shift gears a little bit is here on when it comes to our risk reward ratio is going to be here on the euro. And that's where we're going to put in a limit of 1-to-1 risk reward. Essentially what this does is it gives us choices for either dollar strength and or dollar weakness, one or the other. And then whenever we put on a cross currency, that is what we call dollar neutral, because cross currencies are taking the dollar out of the equation. So it leaves us, after not really trading yesterday up until today, this gives us the opportunity to perhaps, to give us a smorgasbord, if you will, of different opportunities. Okay, we're about 934 right now. Let me just make sure I got all these in place. There we go. Okay, so we're not close there. Not close yet on the pound. Let's go look at some of these commodity currencies. New Zealand yen sinking a little bit. Let's go to CAD yen, first one we looked at. Probably the closest one to execution. Got the resistance level a little off there. Let's put that up here. Remember, we're not that far away from it. And we could probably tighten our stop a little bit on here. Or the other thing you could do is just put your stop at like a 50 max, which would still leave it, right near these lows. Like this low 86.086. Just want to give that a second. I want to make sure that it stands there. Where are we at? 935. Let's see, crude oil's up almost 3% today. Dow's up 114. S&P's up 11. Our markets are only up about 0.5% right now. NASDAQ's up 32. If we mirror the European markets, we could go upwards of maybe up 1 to 1.5% today. Let's see here. Got about 4 more minutes. I said the 940. I just wanted to give the stocks a chance to open up. and just kind of go through their rotation, which usually takes between 5 to 10 minutes for everything to kind of get going. I don't think it's necessary to wait the extra second. We'll go ahead and put this in. So I went ahead and did my one lotter. I went ahead and put it in. We're about 3 minutes away. I don't think it's really necessary to wait until 9:40. I mean, I just wanted to make sure that we went through the rotation, and it's starting to peak through those highs. Where's this low at? 8.996. I'm going to make this simple. I'm going to put my stop 86.217. I'm just going to make this a 50 max stop, which still puts us right below this low, or very close down below this low, right in through here. Actually, it's the yen. You know, this is one mistake that I always make. Six. Put it 0.87. So that would be a 63 pip stop, which on the yen, it's not that bad because that actually comes out to about 50 pips for me. And for right now, I'm going to put my limit 87 point, let's see here. So the risk would be 63 pips, put it 93 pips away. So that would be 90 pips, 617, 93, 647, 87.647. And that would still put me at a 3-bar reversal at 10 o'clock because this is already broken out into the high. So it puts me in still a 3-bar reversal zone on that. Since this has been consolidated, can CAD yen move? Absolutely it can. Where's Aussie yen at? If you're a little bit more conservative, you can kind of look at Aussie yen. See, there's our breakout right in there. It's still sitting there trading above. And remember, on all these, you can, if you want to wait until the 10 o'clock hour to see where the candles close, you can do that also and use like a 50 pip max. But CAD yen is certainly looking good because oil is up so big today. And if the market continues up, my guess would be is that dollar yen will continue up and dollar CAD will continue down if this continues. So I think that puts you in a good position. You know, the yen can certainly go up and possibly retrace up to 113 if we have an up day. If oil stays up today, dollar CAD could be in for lower lows. It's already broken down below the 130 level. And that's just kind of given us the best of both worlds of what we would call a risk-on market. I know some of you hate the whole risk-on, risk-off speech, but this is, you know, risk-on conditions, generally higher yielding assets, commodity currencies go up. Yen generally gets weaker. There's not a high correlation of that right now, but that's what we're seeing in the market right now. So we got to kind of, we have to be able to, you know, trade off of what the market conditions are telling us. So that's in, that's executed. And let's see here, pound dollar, that's not close yet. Euro dollar, still sinking down. In fact, it's made a new swing low. So that's not close to execution yet. From a dollar weakness standpoint, nothing on euro dollar. From a dollar strength standpoint, remember this pound is so overbought right now. Or not overbought. I should say that with the totals the way they are, you know, all you need is those totals to go negative on the pound. You know, a lot of these big, I try to tell people all this time, you know, you often will see when things are this consolidated and this tight, that's what you call a market maker's market. You know, liquidity providers generally want 50% of their business on the bid and 50% of their business on the ask. When these things aren't moving a whole lot, this is liquidity provider's market because the market's not moving and they can make a strong market in the underlying without it having to move too much. So, you know, that's why we, you know, a lot of times when we're looking at these big shifts in the buy and sell imbalances, that's why you want it off into space. You want there to be space. You want it to have cleared somewhere, you know, whether it be a previous low or a near-term high, to really give credence to the fact that there's buying or selling pressure on the imbalances. You know, you often see it during the Japanese session or the Austrasian session where you'll see big shifts up and down in the, like right up in here, you know, where it was consolidated like this, you see big shifts up and down in the buy and sell imbalances. And that's because, you know, it's a liquidity provider market. It hasn't really broken out anywhere in here. See the same thing right in here. You see how the big buy and sell imbalances go up and down. And again, right down in here, you see big moves in the buy and sell imbalances when it hasn't moved anywhere. So it doesn't take much for these things to shift. But you know, you want to just be cautious. Let me go back to euro dollar, see if that's coming down lower. Which it's not. All right. Just making some support there on the Mr. Euro dollar. Let's go ahead and save our file. Markets are still up nicely. $3.30.16. And get this saved as a PDF. I know some of you can hear it, but my notorious dog is actually in the other room, not even close to me, and you could probably still hear him snoring in the background. In case you don't know, the dog that we have it's a really small King Cavalier Charles Spaniel, so one of those kind of medium to tiny dogs, and it snores like a 300-pound Irish dock worker. So even when it's in the other room, you can hear the thing just rattling off. It's actually kind of entertaining. All right. So we got one trade on that we're in. We're up about a whole 0.13 pips right now. Let me share the handout. We're up 2 pips now on the CAD yen, so that's kind of moving for us. So, and I need to get these other things transferred over real quick. I need to get you the handout, which I'll put into the room here. There you go. One thing I would add here, since we are long on CAD yen and we are making some headway on it, is, if you get to the point where you even make back half of what let's say we're risking, we're looking to make like 93 pips on this trade or whatever it may be. Once you make back half of it, if it reaches the halfway point of, let's say, even a 1-to-1 risk reward, make sure you put that stop to break even as soon as you possibly can. So if you do get a large amount of headway on this and it starts to come up, trail your stop, look at the last 3 bars, keep your stop at least below the last 3 bars on the chart. And then if it keeps on going up, once it reaches half, let's say if it's 93 pips that we're looking to make back, once it reaches half, then make sure you move your stop to at least break even. So if it gets to the point where it's up like 46.5 pips, put your stop at break even at the very least. And if it keeps on making headway to the upside, keep moving that stop up. The best way to do it, you can use keep putting your stop at the low of the 3 bars. So you'd count back 1, 2, 3, whatever the closing bars are. And that's it. That's all I got for today. So just manage your risk wisely. And that's our story. We're sticking to it. So I will chat with everybody later. Some of you I'll chat with here in about a half hour. And I will talk to you later. Thanks for coming in. Bye-bye.